thank you for joining us tonight. My name is Linda Halloran. I'm the Community Engagement Manager here at Town & Country Federal Credit Union. And I want to thank you for joining us for this virtual financial workshop tonight on home financing in a unique market, what you need to know. This session is part of Town & Country's ongoing virtual workshop series that we've been offering throughout the past year. If you're like me, hardly a day goes by when you don't hear something in the news about what's going on in this wild housing market here in Maine and really across the country. Or hear a story about a house in your neighborhood that sold for way more than the asking price in just a matter of days. And probably are asking yourself, what should I do? Should I get in on this? Should I sell? Should I remodel? Should I refinance? If I sell, where do I go? And every day we are hearing these kinds of questions and others from our members. So we've put together this workshop tonight to address some of those questions, answer some of them, and some others that you may have, and brought together a panel of experts from Town & Country's mortgage and consumer lending group to talk about home financing options in this crazy market. We'll hear from Lisa Belfler, Chelsea Torrey, and Shannon Seegers from our mortgage team, as well as Crystal Cormier, who is one of our consumer lending officers. So I will let them introduce themselves and tell you a little bit more about themselves as we launch into the presentation. I do want to let you know or ask that if you have questions throughout the presentation, to please list them or post them in the chat to everyone. We will hold questions till the end because our panel is going to touch on lots of different topics. And so when they finish sharing their comments, we'll take other questions. So I would like to turn it over to Lisa Belfler, and she will kick things off. Thanks, Lisa.
Good evening, everyone. Thank you for joining us tonight. It's a pleasure to have you. Again, my name is Lisa Belfler. I am the Vice President of Mortgage Services here at Town & Country. I've been with the credit union since June of 2015, and I have been in the mortgage industry since 2002. I do live in Scarborough and have been for the last 30 years.
Hey everyone, thanks for joining us tonight. My name is Chelsea Torrey. I'm a mortgage loan officer here at Town & Country. Prior to coming to the credit union about 4 years ago, I worked for the USDA Rural Development and have a very deep passion for public service and affordable housing, which the credit union has allowed me to really bring with me here and flourish with. I reside in Cape Elizabeth with my 2 daughters, my husband, and my dog Rooney.
Hi, I'm Shannon Seegers, and I've been with Town & Country for 6 years now, and in the mortgage industry for 21 years, playing many roles throughout those years as processor, closer, junior underwriter, and now mortgage loan officer. I reside in Scarborough, and happy to be part of the discussion tonight.
And last but not least, I'm Crystal Cormier. I've been with the credit union now for about 14 years. I started out as a member service rep, have worked my way up through management, and now working as an underwriter in the consumer lending department. I am also local. I'm from Standish and live in Standish with my family as well, which consists of 2 puppies, husband and son. So I hope that you learn a lot this evening, and here we go.
Town & Country Credit Union has been assisting members with their financial needs since 1953. We have 40,000 members and serve Cumberland and York County. We have 6 branches located in the Saco, Scarborough, Portland, and South Portland areas. And our mortgage department is located at our operations center in Scarborough. Tonight, we will be reviewing a variety of topics, and they will be Maine housing market, preparing to buy or sell, home buying financing options, refinancing your home, maximizing your home's equity, and market realities. The current market continues to be in a low inventory status, which makes it a seller's market. Homes that are listed for sale average 11 days on the market, and the average sales price in Cumberland County currently is $355,000. Home values have increased extensively. It is common in a seller's market with low inventory that there are multiple offers on homes and is prompting buyers to make offers on homes over asking price without inspections and appraisals just to land the property. Mortgage rates remain historically low and have been for about 2 years, and it's expected to continue through 2021. Financial experts are saying the low rate environment could continue into 2022 as the economy continues to rebound from the COVID-19 pandemic. Here at Town & Country, we offer an array of comprehensive home loan options. We are a local lender and service our mortgage loans locally. Our goal and commitment to our membership is to create long-lasting relationships now and after the loan closes. Tonight, we will talk about some things for you to consider as you contemplate your home financing options in this current crazy market. Whether you are a new buyer looking to downsize, upsize, refinance, remodel, or just get cash out, we hope provide you with some information to help you with your next move.
This market's definitely a bit crazy. So if you're in the market to buy a home in the near future here, you really need to be prepared. And one of the biggest components that goes into that right now is setting a budget, and really not only from a monthly basis standpoint, but also your overall budget, what you're willing to spend for the purchase price of a home and what you have available as far as down payment is concerned. When you look at the monthly payment projection, if I qualify you for a mortgage, I might say you can afford a $2,500 a month payment. But if that makes you squeamish, then you don't want to be in a mortgage with a $2,500 a month payment. So you should really be assessing your budget goals, what your savings goals are after you buy a home, what your other lifestyle needs are, if you have childcare expenses and other things like that. You don't want to be in a position that's going to be problematic for you down the road. So setting a budget on what your monthly payment looks like is, at the forefront of your decision making. On the point of the purchase price, the budget that you set there, you might start the process and say, I don't want to go above $300,000 for a home. If that's the case, then ultimately right now you're looking in a range of maybe 250 to 275 if 300 is really your max, because people are offering typically anywhere from $20,000 to $50,000 over asking price right now from what we're seeing in at least the greater Portland area. So being prepared to have to exceed the listing prices on homes is also imperative at this time. Evaluating your sources of down payment funds will be necessary, especially if you need to exceed that list price in your offer. So it's a good opportunity to look at what you have as far as your cash savings on hand. Do you have equity in real estate already that you can tap into? Do you have retirement assets available? Some of them have really great loan options right now. I'm not always one to recommend a retirement loan or withdrawal from a retirement plan for the purpose of a home purchase. However, there are instances where it makes sense. You also might have an opportunity for some gift funds from family to afford you the purchase that you're looking for. So exploring all of those options early on in the process and really knowing what's available to you is imperative as you embark on this right now. Your purchasing power, like I just said, if you have a limited purchasing power, it might be necessary to review some alternative loan options. There are many different loan products that are geared towards first-time home buyers. It's not a one-size-fits-all approach. Sometimes we'll get people who come to us at the credit union and they say, I want this loan or I want that loan. And ultimately, you just need to leave it up to us to determine what best suits your financial profile. They all have different qualification parameters based around your household income, your assets that are available to you, your debt to income ratios, and your credit requirements. So we can certainly help to determine what financing options exist based on that financial profile. Location. If you have always dreamed of having a walkable living arrangement where you can walk to work or walk to the grocery store, you want to make sure that you're not straying too far from your goals in this current market. It is very difficult to stay in the greater Portland area, depending on what your limitations are around your purchasing and your pre-approval power. If you are someone who really wants to live in a more rural area, that's great, and by all means. But not everybody wants to commute. Not everybody wants to have a car. So just being mindful of that and looking also down the road at what happens when the pandemic hopefully is over at some point in the near future. And if you do have a full return to an office location, if you buy a house in the middle of a pandemic that's an hour and a half away because you're working remotely, that might not be the best arrangement for you later on down the road. So just be mindful of that. And then getting pre-approved before you start shopping for a home. It's really difficult to have a realtor take you seriously at this point in time if you don't have a valid pre-approval worked up with a lender already. A pre-qualification is sufficient. However, pre-qual is based on unverified information, which really doesn't bode well for current market conditions and having a successful offer acceptance. Getting an approval based on your validated credit, income, and assets can eliminate surprises and save time down the road so that the focus can be on the property that you're looking to pursue. And so the types of properties that we finance here at Town and Country, we assist people with primary residences, second homes if you're looking to relocate or have a camp or seasonal property, and also investment properties. We can finance single family homes, condos, whether they are new construction or existing. We can also finance 1 to 4 unit or 2 to 4 unit properties as well. So multi-unit properties, either owner occupied or non-owner occupied. Our financing options that we have available here, we've got our traditional mortgage loan offerings, as well as I am a certified loan packager for the USDA Rural Development Loan Program, which is specifically geared towards low and very low income households to help make homeownership affordable. We also have our equity loans and lines of credit, which Crystal's going to be reviewing a little bit further in a few minutes here.
All right, thank you, Chelsea. On to refinancing. Common reasons folks are calling in to inquire about refinancing and how to use the equity in their home. First and foremost is saving money. This could look like removing PMI, private mortgage insurance, lowering the rate, reducing the term. It could be a combination of all three. Another reason would be cash out refinance. This could be for home improvements to take care of just the regular home maintenance items in your home, or actually tackle a major home improvement project. Another cash out purpose would be for debt consolidation. This could be combining a first and second mortgage together, taking care of any escalated credit card debt or other installment debt that has high balances, high rates, or longer terms. This could drastically improve one's monthly cash flow, giving that fresh start that you might need. And in these, the cash out transactions, we do like to work with our consumer loan department side by side and do a comparison. Sometimes it could benefit the member instead of doing a cash out refinance. It could make more sense for them to take out a home equity line or loan. And to kind of go into a story with how the departments do work side by side, recently a member came and needed some cash out just to take care of some minor home improvements that needed to happened when pulling credit. They actually had a lot of escalating credit card debt. This person is retired on a fixed income. So they reached out to us, ran some numbers, and it really made sense to put them in a 30-year term. We were able to consolidate their first mortgage, all of the credit card debt, give them the cash they needed to take care of the home improvement, and save them about $800 a month, which was huge for this member. And the fourth reason that someone might be refinancing is life events. This could be a divorce, it could be a marriage, it could be someone heading into retirement or purchasing a second home, or college tuition that might be needed to be funded by a parent or someone just going back to college. So those would be the reasons, and I'll give it over to Crystal at this point.
Thank you, Shannon.
You're welcome.
So I wanted to kind of piggyback a little bit on how closely the consumer lending team does work with our mortgage team. And as Shannon stated, we definitely try to do what's best for our membership. So there are times that someone will come to us on the consumer side and they're looking to take cash out as an equity. And as Shannon said, we see their situation, this may not be what's best for them. It's not a long-term solution. So we actually have our mortgage team do a side-by-side comparison to see, well, would it be better to pay a slightly higher rate on the home equity side, or is it better to pay some closing costs, maybe go out 20 years and make a little bit of a lower payment at a lower rate? So we'll compare all of those to see what makes the most financial sense for the member, because sometimes paying the closing cost is going to actually cost you more than maybe doing a 15-year fix at a slightly higher rate. And that's one of the things that I value working here as an employee is how much time and thought we put into solutions for our members and hearing their stories. Something else that Chelsea mentioned too is that the market right now is just so limited. Like what's out there, they go on the market and they're gone. And as Lisa said, it's over asking price. So what we're seeing a lot of members now do is they realize it's a seller's market and they are taking out equity lines on their current residence so that they have purchasing power and can go into buying another home as a cash borrower, versus having to go through a full pre-approval process and getting that letter and have all your financials verified. They can just use what they already have worked hard to own, like their current residence, take out that home equity line and actually like bridge the gap, as we call it. So take out a bridge loan as home equity on their current property, buy that new property, and then they just pay off the line of credit and have no mortgage. So there's definitely some pros of having equity in your home and using those home equity lines. The other thing that people don't realize too is Chelsea touched on the fact that we can now do home equities on non-owner occupied 1 to 4 family homes, which is great. In the past, those have been looked at as investment properties if they weren't owner occupied. Well, now we can actually use those on the consumer side to allow people to maximize the equity in those properties, which is great. The other thing that we're seeing a lot of is equities to purchase autos, RVs, boats. A lot of people have held off on that right now because COVID really set people back. And now they're realizing, okay, things are starting to take a turn. Let's get out there and start buying. And they go into the purchase as a cash buyer because they're going in using their line of credit to purchase the auto. They can negotiate the terms themselves. And then what we see is they come back to us and they may put that balance that they have on their home equity line of credit into a fixed rate on an auto loan with us. So they use it to buy things that they want. They negotiate better terms, then just pay it back. Another thing that we're getting a lot of is people coming to us for lines of credit because their financial planner is helping them prepare for retirement. So they want to have that as a supplemental cash flow. You should always have something to fall back on. So a lot of the financial planners say, well, why don't you just get a home equity line of credit, even if it's for $50,000, just so you have that for peace of mind. Let's say tomorrow you need to replace your furnace. We all know that's not a cheap repair. So you have that home equity there available to use right away. And you can pay for the repairs, get it paid back, and there's a multitude of ways to do that. I'm actually going to go through the different products we have on my next slide, but one other thing you could always have those lines of credit for is if a medical emergency came up, you have that cash flow there for you. So that's just a few of the things, but Town and Country offers 3 different types of home equity products, and we feel they're pretty strong products to meet people's needs because we offer the typical closed-end fixed-rate home equity loan, and then we have 2 different types of lines of credit. And in this initial email that we sent out, we got a chat question asking us, well, I don't really know the difference and I don't know how lines of credit work. So we thought that we could put this slide up and kind of explain the difference between the 2, and then I'll actually dig into the difference between our lines of credit. So a fixed rate home equity loan is more designed to be an installment loan. You get a fixed amount of money upfront, fixed payment, fixed rate, and you get the lump sum at closing and pay it back over a set period of time. It works very similar to a mortgage, whereas a line of credit is a variable rate. And you can draw on it as you need and you only pay on what you use. But Town and Country has a unique one. It's called an equity builder line of credit. And what those do is they follow the prime rates and it allows you to draw off it as you need it, but it's an aggressive payback period where you pay back 1.5% of what you use. So you're actually building your equity back a lot quicker than you would say if you took out our interest only line of credit, which is only going to bill you interest on a monthly payment on a monthly basis. So a lot of people will also use these lines of credit maybe if they have schooling, like Shannon was talking about. They have schooling coming up for their children. They want to be able to pay the tuition quickly. They know they need to have home improvements done and they don't know what they're going to cost. They have that line of credit to pay for things that they need right now. One thing I wanted to share with the group while we have you here is a story of someone that we actually just recently helped. This person actually, I'm going to use his words, bear with me one second. He said to me that he was on a bubble and they were starting to tilt the other way, were his words. He had actually got himself into some debt, about $100,000 of unsecured credit card and personal loans, helping his daughter get through private school, then on to college and graduate school. And they were just building up all of this debt. They're very stable people, longevity in their jobs, great credit, but they were on that cusp of where they'd actually got themselves so overextended in debt that they were on the verge of filing a bankruptcy. And what we were able to do is we sat down and had lengthy conversations with them, but we actually saved them on a monthly basis over $1,000 by maximizing the equity in their home and putting all that debt into a fixed payment every month to help them get out of that vicious cycle they'd gotten into of robbing Peter to pay Paul. We helped them prevent bankruptcy, and we got them back on track so that they now can budget every single month. They have positive cash flow and they're keeping their home. So they were extremely happy with what we could do, but it took getting very creative and talking to them and making sure they weren't going to get themselves into that situation again. But that's one thing that we do is we listen to our members' needs and we try to get the whole story and see what we can do to help. That's going to wrap up my portion of this presentation as well. What I would like to say is thank you for listening. We know that we'll probably have some chat questions to answer for you, but we really appreciate you attending this evening and hope you all learned something.
Thanks, Crystal. Thank you, Lisa and Chelsea and Shannon. And before we go on to questions, I want to ask you to take a second, grab your phone, and take a picture of the QR code that you see on the screen. And that will open up the survey question. And there's just a couple of questions there. We would really appreciate your feedback about the information you've heard so far and other things that are on your mind. So with that, I'd like to take a look at some of the questions or bring up some of the questions you've entered in the chat. And then we also have a number of things that you shared with us when you and others registered for the workshop. So I'll look at the chat first. And Chelsea, I think this one's probably for you. Someone asked, do I have to have a property in mind, or can I get approved for a certain amount? You want to talk a little bit about the that process, and maybe if there's anything else to dig into about pre-approval versus pre-qualification, if there are any other things to add about that.
Yeah,
When
definitely, Linda.
use each of those.
So when someone's ready to start shopping around in the current market, I do recommend that they submit an application with their full documentation. So we need to verify your income sources. We'll be verifying credit with a valid credit report. We will review your asset statements, your savings, and we'll do an analysis of really what your housing payment affordability range is. And then also, typically, we're going to fine tune that with what's comfortable for you so that we don't have you shopping in a price point that's way outside of your comfort zone. So we review all of those details. We do provide people with a pre-approval letter as well as an estimated worksheet that outlines all of the expected closing costs associated with the transaction that we've developed. We do try to fine tune these details as much as we can. Obviously, it's important to remain cognizant that the real estate taxes from property to property can change quite a bit, depending on the locations that you're looking within and what that tax base is. The other big factor that shifts those details is going to be whether it's a single family home or a 2-unit property or a 3 to 4 unit property, because that's going to shift your down payment requirements. So it ultimately depends on really what you're looking for. It is tough sometimes to get a legitimate like blanket pre-approval that covers every scenario under the sun, because again, some of these details are going to change from property to property. So there is some specificity to it that we are always happy to review on a case-by-case property basis. And also in the current market, most offers that are being made on properties need to be accompanied with a made application letter. So the seller, when you make an offer with a purchase agreement submitted to them saying, I want to buy your house, this is what I want to pay for it, they want to see a letter that says that a loan officer who's working with you has reviewed the details for that specific property to make sure that it fits within your budget and your purchasing power. So we will do that. Again, on a property specific basis. We certainly strive to get those done in a very timely fashion. We try to remain accessible at all times, really, for our membership and our constituencies. So we're always happy to help and review these different scenarios with you as you navigate that process.
Good, thank you. So maybe piggybacking on that, somebody asked about the current down payment percentage on different kinds of building loans or land loans. Is there a rule of thumb for that, or does it depend, I guess?
Yeah, so we do have land loan offerings, which do allow for the standard is usually a 20% down payment. We can, with exception and approval on set exceptions, with a solid financial profile, we can go as low as a 10% down payment. As far as a building or an existing home, we offer financing under our traditional mortgages as low as a 3% down payment. Again, however, that is going to switch depending on if it's a 2-unit property. Then the minimum down payment that we can do would be a 5% down payment. On a 3 to 4 unit property, you're typically going to be looking at a 25% down payment. So it is going to vary quite a bit there. And again, I did mention that I work closely with the USDA Rural Development Direct Loan Program, which does extend 100% financing. So there is no down payment requirement with that program, but you do have to qualify within their income parameters. So.
Okay, very good, thank you. Lisa, someone had asked about any concerns, I guess, kind of looking back at the trends, you know, the way they word it is, do you worry about the cost borrowers are paying now if it will leave a lot of borrowers underwater in the future? Is there any concern? I mean, you know, we certainly had issues in the housing market back in 2008.
Mhm.
Any concern with what's going on or what you're hearing about, you know, this increasing
Mhm.
property prices and values
It's
that are
definitely
happening right now?
definitely having been in the mortgage industry for the amount of years I've seen, it's definitely a cycle. And you know, the values of properties go up and down through the years. And like you said, in 2008 they had that market bubble where everyone was in a, you know, there were a good portion of people that found themselves in a situation where they were underwater with the value of their property. At Town and Country, we really pride ourselves in taking the time to talk to our members, listen to their story, and make sure they're well qualified for at the time that they get a pre-approval to purchase a home. So going into the transaction, really spending the time and talking about the budget, and you know, this is what your value is. And then if they're in a situation where they want to offer more than what the sales price is just to get the home, just giving them the education they need to know that if in the event of the future, should values decrease, this is the type of situation you're going to be situated with. So again, it's a lot about the education and really preparing people when they're obtaining the mortgage, and making sure they qualify and their budget works for that payment amount that they qualify for.
Mhm. And Shannon, do you want to add to that a little bit about kind of like, you know, what people might be experiencing in the home buying process right now? I mean, so if somebody is, you know, jumping in and they're making an offer, or they're interested in, you know, uh, in selling their own homes. I mean, kind of like what's going on with the timing of the process of what's a realistic expectation about what's with the process between applying, getting pre-approved.
Yeah. So, you know, getting pre-approved, well, once you're pre-approved, I mean, really, it's just a logistics of, you know, finding the right home. But once you do, I mean, that could take someone in this market. I've been working with people who have been pre-approved for 6 or 7, 8 months before they, you know, locate a home of interest. But once they do, I would expect about, depending on the location of the property, anywhere from 35 to 45 days from when they sign the contract to when they go to the closing table would be like the time frame for that.
Mm-hmm. Mm-hmm. Okay. Another question has to do with first-time home buyers, and we didn't touch on a lot about the first-time home buyer and things that they need to do and to think about and to plan for. And right now it might sound a little discouraging, I guess, if you're just wanting to get in for the first time. And what do you recommend a first-time home buyer to be thinking about or doing now? Maybe Chelsea, you kick that off. I mean, everything from, you know, looking at their credit score. I mean, what are the foundational things to plan for, to maybe if it's not this next year with what's going on right now, maybe if it's in another year or two, to really set the stage to be a successful first-time home buyer? What kinds of recommendations do you guys have?
Yeah, so as a first-time home buyer, you know, I had a very favorable first-time home buyer experience myself individually. I was able to purchase my home, you know, with a rural development loan and 100% financing, but I purchased in 2009 at the bottom of the market when everything was really low. So I was in a very different position than the current market is allowing for. I don't necessarily think that a first-time buyer should, you know, skip out on it altogether. I think that it's more so a matter of being educated about what you're going to face. If you're in a position where you've got a limited purchasing power, or you have limited funds available for down payment and to, to exceed that purchasing price point that you're looking at, then it's really a good time to reassess and see, okay, well, am I going to be able to do this and keep homeownership affordable for myself? If you can't keep it affordable, it's not going to make a lot of sense for you, especially if you're in a current living arrangement where you're not up against a wall, where you've got to get out of your current lease or rental position, or you don't have housing at all, or whatever your position is. Obviously, everybody's situation is different. There's no two the same when we're reviewing borrowers. And so I think it's really an individualized decision based on what your capacity is, what you can take on at this moment. I think if it does turn out that it's going to be very difficult for an individual to purchase in the current market, that they really need to look at, okay, well, what can I do to make sure that this is really, I'm setting myself up in a strong position for when I am ready to pursue it, when the market does settle a little bit. It's inevitable. It can't stay like this forever. That's just unreasonable to expect at this point. So I think being prepared for when things do turn around, work on the savings, start really setting a savings goal on what you want to be able to have available. Even if you do have financing options available that allow for 100% financing or 3% down or whatever it might be, you still want to have some cash on hand after the transaction's over. You don't want to deplete your entire savings buying a house and then have nothing to work with from there. So really focusing and honing in on what those savings need to look like for the future. And then also setting yourself up in the most optimal credit position. If you've got a mid-range score, a fair credit rating to good, then now's the time to work on it. See if you can get that to an excellent position so that, again, when you are ready to take that leap, that you can attain the best available interest rate and the best private mortgage insurance rate, and all of these other factors. And then also thinking about just the mortgage rates, but then what your other credit availability rates are. How can you, when you buy a house, you have to also look at, okay, well, what are my other expenses on a monthly basis? And if your credit was kind of not in the best shape when you got your car, maybe it's a good opportunity to reassess refinancing a vehicle and trying to reduce that payment and get it under a better rate and do those things. So I think that there's a lot of room for improvement when it comes to credit and how it's handled, and just educating yourself on those very key components of life and adulthood before you dive into home ownership. So, and we're always happy to help people navigate that.
I just want to touch on that too, that each person within our branches, so we have branch managers and assistant managers who are also trained on the lending side, and each one of them is very educated on helping people with building their credit as well. So if anyone out there needs assistance with what should I do next, we have tools within our branches over the phone, and we also have Savvy Money on our website, which is very similar to like a Credit Karma, and it will actually walk you through how to improve your score. It gives you an A, B, C, D, or a fail grade for each type of thing on your credit report, and it'll tell you what you do to get that credit score to increase. And it's a really great tool to use if you're not well educated on what a credit score actually means. It'll walk you through that process. So I just wanted to add that tip in there too, Linda.
Mm-hmm. And you can access the Savvy Money through online banking for those of you that maybe don't know it or are using it yet. Crystal, a question for you. So if someone, rates are still really historically low. We hear that phrase used a lot when it comes to home loan rates. And what's some of the guidance or thinking if somebody has a 30-year loan and they want to pay it off maybe more quickly to refinance? What kind of options are there to refinance even outside of a mortgage, using a home equity loan?
So a lot of people don't realize, a lot of people don't realize you can actually pay off your first mortgage using a home equity. because they think a home equity is just that you have to actually use the equity in your house. We've actually had people coming to us and refinancing their first mortgage into a 10 or 8 or 5-year loan right now just to get them paid off quickly. A lot of the stimulus money has come in. People were able to put chunks of money down onto their mortgages and get them paid off quicker. So they're setting themselves up for a better retirement plan, which has been great. We're seeing a lot more business come in, and the housing market is so hot too. A lot of people are choosing to stay in their homes. So they're thinking, well, if I can get this paid down quicker and my property value is increasing, then I can make some much needed improvements at these shorter terms and lower rates. So we have a lot of options that we can offer members, and we'd be glad to do that at any point. So we will compare. We can set terms into 7 years. It could be 6.5 years. Like, we can make the payment work for your budget, which is great.
Current mortgage rates, current pricing trends, what's a typical cycle? Not that anything is typical about this past year or so, but based on your 20 plus years of mortgage experience, what have you seen as a typical cycle, or what are you hearing that's
I mean,
crystal
definitely
ball anticipation of the bubble bursting or things shifting, which is all just anticipation. But what do you hear?
Yeah, being the mortgage cycle is definitely not something that you can actually pinpoint and give a term to, but knowing that the time in 2008 when the market did change, it was like from the end of 2007 through 2009, so that was like a 2-year period. But all of the things that factor into all of these cycles and how values change and increase or decrease is a lot to do with the marketability of what's going on in the economy, what's going on with the job market, and those types of things factor into how these different values are affected, just like this COVID-19 pandemic and how it's affected the market now. It's become a strong seller's market, which is in return increasing the value of all of these properties. Hopefully, once this COVID-19 pandemic, subsides and we're in a different level, we'll hopefully see the market settle down and values stay at a regular, relatively rate that, and level that people can afford, and, people aren't forced to pay over asking price just to get a property. Once the market settles, you'll find that more people might be interested in selling their homes, which increases the inventory, and at that point settles the values of the properties, which in return, a borrower doesn't have to overpay for a price of a home.
I mean, a lot of people are deciding to stay put, and what really can we maximize about staying put in our home these days?
Yeah, I would have to say, well, if you own a home and if you, purchase, say, 4 or 5 years ago, I think it's a great time, especially if you purchased and there was the private mortgage insurance requirement, or, perhaps it could have been the type of product that you used when you purchased the home, such as FHA, that has their own PMI, which is the life of the loan. So I think if you've owned a house for 4 or 5 years and how the market is right now, you may be there where refinancing, because you meet that 80% loan to value requirement, so you can eliminate the mortgage insurance. So I think it's a great time for people who have owned for 5 years to kind of reevaluate that situation. With rates being historically low, a lot of times, that's not being changed. And at that time too, just looking at the term, and if you've owned a home for 5 years, going down to a 20-year term may not really adjust the payment all that much, especially when you're eliminating the mortgage insurance. So I think that would be, I get a lot of calls in that regard at this point. And then staying put, I think more people have decided, I think we've been at this house and taking on those major home renovations, be it a kitchen remodel, update, bathroom remodel, and considering that, cash out refinance. People are realizing, oh, well, I'm going to stay put, but hey, I've wanted that screen-in porch for a long time. So, let's see if we can make that happen.
Ways
make
for a
the
lot
home.
of fire pits in the backyard and things like that.
Yeah, absolutely.
Somebody else asked about like what other types of mortgage financing that we offer. And I know, Chelsea, you touched on rural development. Lisa, you want to get in a little bit? I mean, do we offer VA? What other kinds of options do we have?
Town and Country, we have our traditional mortgage product along with a portfolio product. Industry-wide, the programs that are available, such as FHA, USDA, VA, they have, those are typically the types of programs that are available. At Town and Country, the government programs such as VA and FHA and USDA, it's something we're looking at. We're hoping to have it in the future, but with the products that we do offer currently, we have the flexibility. Our traditional product, we follow secondary market guidelines when it comes to credit, loan to value, and so forth. And then we have the portfolio product, which enables us to become creative if somebody's in a situation of maybe they filed bankruptcy, it's been less than 2 years, they've improved their credit score and established credit since the bankruptcy filing. In the secondary market, something like that, you have to have had the discharge for at least 4 years. With the portfolio program, as long as the member qualifies, has a good profile, and have made strides since the filing, it's something that we could help assist them with the financing, regardless of their past history, and not having to wait that 4-year term. We also have the ability with this product to finance seasonal properties that are 3-season homes, which again, on the secondary market isn't an attractive product. A few lenders are involved in that type of home, but here at Town and Country, again, based on the members' qualifications, something that we can offer financing for. Along with non-warrantable condos, if you're in a situation where you're trying to purchase a condo in a newly developed association, the secondary market, again, there's issues with financing and that type of product because the condo association isn't complete. There's different phases that are coming up. At Town and Country, again, we have that ability in the portfolio product to be creative and help with the financing for those types of properties. Every situation is unique, and so we like to sit and talk to the members, get their story, and find out the best product that fits their needs and budgets accordingly. All of our mortgages are serviced locally, and that's a very big component to the national lenders and other larger lenders. You may close on the loan, and then 30 days later, the mortgage is sold to another lender that could be outside of the state of Maine. So with Town and Country, your mortgage will always be local. You can always pick up the phone and speak to somebody local about your loan. And to most people, that's a very satisfying piece for their mortgage.
Very good. Do any of you have anything else, any other thoughts that come to mind that you want to share before we get ready to wrap it up?
Even if we don't necessarily offer the loan option in-house at Town and Country, it may be a good fit for you depending on what your goals are and what type of property you're looking to pursue. So we're always happy to be, a sounding board for people and review those details with them and the differences and, what the pros and cons are of those unique situations. So it's certainly worth evaluating fully and not necessarily just catching on to the buzzwords and the terms that you hear. A lot of people, we get those calls all the time. Do you offer FHA loans? And the response that I always have is, why do you want an FHA loan? And usually it's because they've heard of it. So it isn't always because they understand the ins and outs of it. So we're happy to review those details with you a bit further and try to help you make the best decision that fits your financial goals.
So if any of you want to reach out with specific questions to any of our panelists, you can contact them here via email, and I'm sure they'll be happy to answer your questions and talk with you more about your specific situation. So I want to thank Lisa, Chelsea, Shannon, and Crystal for sharing their expertise, ideas, insights about home financing today. We covered a lot of ground. There's a lot going on. And so thank you so much for sharing all that information. And thank you to all of you who participated with this virtual workshop. I hope we were able to answer many of your questions and give you some ideas for next steps. And at Town and Country, we know that you have a lot of questions about money, and each of your situations are very individual. And so we hope you'll feel free to reach out to this group of people or to reach out to us with other questions through tcfcu.com. So thank you again, and just want to let you know that in the coming days, we will be sending a follow-up note with a recording of tonight's video that you can watch if you just wanted to get refreshed on the things that were covered or want to share with others. So with that, say good night and have a great evening.